All right, let's check class week 1. In our pre-adjustment trial balance, we have under the financial position section, we've got trading stock worth 700,000, consumable stores on hand. This is on the 1st of March, which is the beginning of the year. 1st of March 2021 is the beginning of the financial year, and that is 600. Under nominal account section, we've got packing material 4,500, stationery 15,450. Point 1 says that the bookkeeper did not do the reversal of adjustment for consumable stores at the beginning of the financial year. The consumable stores on hand consist of stationery that was not used in the previous financial year. We need to reverse the adjustment. To reverse this adjustment, we will have to do a reverse entry in the general journal. Normally, we will debit what was not used last year, which is stationery, because it will be an expense in the current financial year. And then we have to get rid of that current asset we had from the previous financial year. That will be consumable stores on hand, and the value for that will be 600. So we credit that because our asset is decreasing and it is a current asset. And as per the definition of assets or current assets, you'll remember that they represent any asset that will be used or converted into cash within 12 months. So those consumable stores will be converted, will not be converted, instead will be used. And when we use it, we are going to recognize it as an expense. Then it says stock with the retail value of 3,300 was delivered to the store on the 28th of February 2022, which is the end of the financial year. Kenneth marks its trading stock at 50% on cost. The transaction was not recorded. We need to find the cost price of that 3,300, and we will have to record the entry. Note that because we bought trading stock will increase on the debit side by the cost price of the stock that was purchased. And we are simply going to credit bank, which results in money going down when we buy that stock, or we credit creditors control. In case we bought those goods on credit, creditors control will increase on the credit side. That is because it is a current liability. So it's either it's bank or creditors control because we bought. It's either we bought it for cash or we bought it on credit. When we record this, we will simply debit trading stock by 2,200, which is 3,300 multiplied by 100 divided by 150, which is 100 is the cost, 150 is the cost plus markup. And that's how you will calculate the cost price of the trading stock that we purchased. We are simply going to credit bank or creditors control, as I have said. The second part, the third point says stock counts on the 28th of February 2022 revealed the following on hand, trading stock, and in brackets it says stock mentioned in item 2 was not included, meaning that the stock that we bought was not counted. So we will need to include it in that 690 to get the total stock that would have been counted. One of the reasons why this was not counted is because when you think about it, those goods were only delivered on the last day of the financial year. Probably that's why they were not counted. They were delivered on the last day, on the 28th of February 2022. So in this case, we actually need to adjust both the amount that we have in the trial balance and the amounts that we have counted. So I will first adjust the one that is in the trial balance by first increasing it by 2,200. Remember, in our trial balance, our trading stock is sitting at 700,000. We are going to increase it by 2,200, and then the new balance, which will be the adjusted amount, will be that 700,000 plus 2,200. That will give you 702,200. And as per stock count, our stock will need to be adjusted as well. It will be 690,000 plus 2,200. And you will realize in this case, the stock count amount will simply be way less than what we have in the trial balance. So what we have in the trial balance will have to be adjusted down. We are simply going to adjust it down by 10,000. How did I get that 10,000? Look at the stock count amount. It is 692,200. And in the trial balance, our trading stock is sitting at 702,200. So that 702,000 must be brought down. We need to bring it down. We need to reduce it to 692,200. And we are going to reduce it. The reduction of the trading stock that we have, the adjusted amount of trading stock as per the trial balance, will actually result in a trading stock deficit. Do not forget that. How do we record this? We will simply debit trading stock deficit and then credit our trading stock. That is because our asset trading stock is decreasing. We are debiting trading stock deficit because that is an expense. And expenses, when they go up on the debit side. Other things that were counted will be your stationery, which is 1,950, and packing material, that will be 500. So we are going to debit consumable stores on hand and then credit packing material by that 1,950, and then credit stationery by 500. When you add 1,950 with that 500, you will get the 2,450. This is packing material and stationery on hand. Okay, that's it. So I'll go straight to my trading stock account in the general ledger. Our trading stock was sitting at 700,000. We are going to take it up because there was an invoice that was not recorded worth 2,200. We're going to credit it by trading stock deficit. That is a loss, stock lost. So amount of trading stock we are left with will be 692,200, which is what we are going to carry down to the following financial year. And that will be brought down in at the beginning of the next financial year, which will be 692,000. Our consumable stores, we had a balance for consumable stores at the beginning of the financial year, which was 600. We have to take it out by recognizing it as an expense in our stationery account, which is 600. Then we put in packing material that was on hand at the end of the current financial year. That was 1,950. And we're going to put in stationery that was on hand at the end of the financial year, which is 500. Our balance carried down will be 2,450, which will be consumables that we still have on hand at the beginning of the next financial year. Our packing material was sitting, as per the trial balance that is, was sitting at 4,500. We need to reduce that by picking material that we still have on hand, which was 500. No, that is incorrect. It's supposed to be 1,950. Just want to double check. No, actually, it is correct. Our packing material is actually 500. Stationery is the one that is 1,950. So when you reduce it by picking material that was not used of 500, you will be left with the actual expense with respect to picking material, and that will go straight to profit or loss account, and the amount for that will simply be 4,000 Rand, which is our actual expense. Stationery, please note that when it comes to stationery, you'll have to have a balance brought down. In this case, it will be 15,415, and then you add the consumable stores that were not reversed at the beginning of the financial year, because that's what you have to use first before you can use the ones that you purchased of 600. And then you minus stationery that was not used at the end of the current financial year, which was 1,950, and then the remainder or the balance will go straight to profit or loss, and that will be 14,100. How did I get that 14,100? I simply found a total on the debit side, which is 15,450 plus 600. It gave me that 16,050, and then you minus 1,950, you will get that 14,100. Under our expenses, I'll start with trading stock deficit. Remember to show brackets or workings and brackets, and that will give us trading stock deficit worth 10,000. Packing material used will be the one that is expensed. So you will take what you have in the trial balance minus the unused, and the used packing material will be 4,000. And that's what you need to put on the far right column. That is your actual expense, which is 4,000. And 4,000, it's basically packing materials that have been used. This 4,000, it must be packing material that has been used. Okay. And then when it comes to stationery, we're going to start with the balance at the beginning of the year for stationery, which is 600, add stationery net purchases of stationery for the current year, which was 14,450, and then you minus stationery that was not used at the end of the current financial year of 1,950. The stationery expense, which is what has been used, will be 14,100. Now take 10,000, add it with 4,000, add it with 14,100, you will get 28,100. And that 28,100 will be operating expenses. The unused part of your consumables, which is packing material and stationery, we are going to record it in our inventory note as consumable stores on hand. In our inventory note, you will have to put in under trading stock will be trading stock as per stock count, which is 692,200. And for consumable stores on hand is what you still have left on hand. And that will be 1,950 plus 500. That will give you 2,450. The total inventory for the current year will be 694,650. In the next video, we will simply be talking about insurance for goods damaged due to fire or theft or any other unexpected event, and also for goods stolen. I'll just start with the notes on this. You need to reduce the value of trading stock by the total amount of stock that has been lost, damaged, or stolen. Trading stock account will be credited by the total or the cost price of goods damaged, stolen, or simply that were destroyed by unexpected events in this case. The amount that will not be recovered, highlight this, the amount that will not be recovered from the insurance company, which is the insurer, must be recognized as a loss. And as you know, according to the definition, losses are regarded as expenses. They're included under expenses. And we're going to call that loss due to theft if that stock was stolen, or we'll simply say loss due to fire if it was destroyed by fire, or loss due to, I can't think of anything. Okay, so it'll be loss due to, depending on the circumstance in this case. We debit it because it goes up whenever we lose stock, and that loss will not be recovered. So we will never get it back. And I have explained this in previous videos, a reduction of your assets somehow is linked to an expense. Okay, so that reduction of an asset goes tends from being an asset to being an expense because assets are investments, and any reduction of your investment will be expense because it's a loss to you. It's a loss. It can be a loss in terms of depreciation, can be a loss in terms of provision for bad debts adjustment. Any loss that affects your asset will be recognized as an expense. Okay, the amount that will be recovered from the insurance company, which is the insurance payout. Guys, understand, here is us claiming back the insurance. So we will get a payout from the insurer. It is not an insurance premium. Insurance premium is what we normally pay every month so that we get insured. In this case, all we have paid every month is coming back to us because what we were insured for, the event has taken place and we will get reimbursed for that. That reinvestment amount will be what we call the insurance payout. You can't recognize the insurance payout as an expense because it's money that is coming to us. We're not paying it, it's what is coming to us. We are claiming an insurance. For instance, your cell phone is insured right now. Every month you keep on paying insurance for your cell phone, which is around 200 Rand. That 200 Rand, every year you're going to multiply it by 12. Okay, so 200 Rand, multiply it by 12, that will give you 2,400. So for the year, your expense will be 2,400. Next year, you lose your phone, and the value of your phone is around 12,000 Rand. The insurance company will give you that 12,000 Rand back. So you can't say that 12,000 Rand is an expense. No, you're not paying it, you're getting it back. And then you can use it to buy another cell phone. That's what we're dealing with here. But sometimes if your cell phone is 12,000 Rand, the insurance company will not actually give you the full 12,000 Rand. They might give you only 80% of your actual cost of your cell phone or your asset. And that's where the problem comes in. If they give you 80%, that 80% that you're going to get, we're going to record it either as bank because cash is coming in, or we're going to record it as insurance receivable or accrued income. That is because that amount of money has not been paid yet. So we'll still get to receive it. I prefer to call it insurance receivable because it's not actually a normal income in this case. Okay. Now, if that payout is paid to us, we're going to recognize it as bank, which is your asset, if the amount was paid to us in cash. And it must be paid to us in cash in the current financial year. But sometimes they will tell you that that amount that you're claiming, you will only receive it in the next financial year. If you receive it in the next financial year, then it's a different story. You are going to recognize it as accrued income or income receivable or simply insurance receivable. So if it's insurance receivable, it will be recorded in trade and other receivables. If it's insurance that has been paid already in the current financial year, it'll go to cash and cash equivalent. So under bank and cash equivalent, you are simply going to add the cash amount that you are going to receive. How do we record this? Just like I've explained, let's say you lost stock worth 2,000. And guys, by the way, I've given you steps on how to deal with this. And I'm just applying them. It's theory. It was the theory that I just read out to you right now. Excuse me, now I'm applying it. I lost stock worth 2,000. So what must I do with my trading stock? I need to reduce it by 2,000 because I have lost stock worth 2,000. So you're going to decrease it. When you decrease it on the credit side. However, when I read this, it says only 1,600 will be received as a payout from the insurer. So they are going to, we lost stock worth 2,000. That we will never get back. But they're only going to give us 1,600 for the stock that we have lost. Meaning that the 2,000 that we have lost, we're going to be reimbursed for it, but not the full amount. The amount that we are going to receive, if we receive it in the current financial year, will be debited and will normally be recorded in the CRJ. But we have to recognize loss due to damage or fire or theft, and that will be 400. Because we will never get that 400 back. That's why it's a loss. It's a loss that results from us losing our stock. Trading stock will still decrease by 2,000 because we have lost stock with 2,000, but we're going to get to 1,600 of the stock lost as cash. But the 400, we will never get it back. That's why that is an expense. And it will go to the statement of profit or loss as such. If the payout was not a cash receipt in the current year, if the payout will only be received in the next financial year, we are going to debit accrued income or insurance receivable, and that goes to trade and other receivables. It doesn't change that we have lost stock worth 400, and we're gonna credit our trading stock by 2,000 because that stock we have lost it, it's gone. But we're gonna get 1,600 as cash reimbursement for that 2,000, but the other 400 must be written off as we will not get it back. You got it? All right. Even though I'm going to do this as a classwork, just want you to try it out, but it's actually an example. You need to read this thoroughly. Calculate trading stock deficit of surplus. You need to record all the transactions in the statement of profit or loss and other comprehensive income and prepare the notes to the financial statements. And you need to record everything in the general journal and the general ledger. For solutions to this, please check out the next video. Please subscribe to the channel. Click on the notification so that you can get notified whenever I post videos. Kgotsong.